Hey guys, welcome. So, look, think of me as your senior, just sitting down with you the night before the big test. This explainer right here, it's your ultimate one-shot revision guide for tomorrow's financial management exam. We're going to completely break down the actual previous year's questions, figure out exactly what the examiners are looking for, and make sure you walk into that exam hall tomorrow with absolute confidence. Let's get into it. Okay, be honest. Is the financial management exam tomorrow giving you major stress, especially when you look at those numericals? Hey, don't worry. Seriously, by the end of this session, you're going to see that this subject is actually incredibly scoring. We are covering the absolute most important theory and numerical concepts, the ones that have a really high chance of repeating. We'll tackle them together, step by step. You've got this. All right, here's our roadmap for this session. First up, 2-mark theory quick wins. Then, 5-mark core concepts. After that, we'll hit the numericals with ratio and balance sheets, working capital and costs, and finally, capital budgeting decision-making. Let's dive right in.
Starting off with Section 1, 2-mark theory quick wins. So, we're kicking things off with these direct theory questions from the actual paper. Grabbing these early points is a real game changer for building momentum. Now, for questions like, what do you mean by financial management? Listen, you do not need to blind memorize textbook definitions. The real trick here is to just understand the core concept and write it in your own clear words.
Let's break down 2 that pop up all the time. First, financial management. It's literally just how a business plans, organizes, and controls its money. Think of it like managing your own monthly allowance, but, on a massive corporate scale. Then there's capital structure. This is just the specific mix of your own money, which is equity, and borrowed money, which is debt. When you're in the exam, write out the definition, and right below it, drop this easy memory trick. Structure equals the recipe of debt plus equity. Simple as that.
Next up, discounted cash flow. This is just the idea that $100 today is worth more than $100 next year because of its earning potential in the meantime. And the operating cycle? Well, that's just a timeline. It's the time it takes to buy raw materials, turn them into finished goods, sell them, and finally get the cash in hand. In the exam, all you gotta do is write one clear sentence defining it and give a super quick one-line example. Boom, 2 marks secured. Easy, right?
Moving right along to Section 2, 5-mark core concepts.
Okay, we're stepping up the weightage now. Here's question 2 directly from the source paper. It covers working capital, modern approaches, and trend analysis. Take a good look and visually anchor yourself to these. I know they might look formal, but knowing exactly what the paper looks like really reduces that fear of the unknown. Now for 5-mark questions like factors affecting working capital, listen up, because presentation is absolutely everything. You have to write point-wise answers with clear headings. For example, nature of business. Obviously, a huge manufacturing plant needs more cash than a tiny software firm. Or seasonal demand. An umbrella maker is going to need a ton of cash right before the rainy season. So write the heading, underline it, and explain it in just 2 sentences. That is exactly how you get full marks. For modern approaches, you just need to summarize the difference. Profit maximization, that's a short-term focus on net income. Wealth maximization, that's the modern, long-term focus on increasing overall share value. And for trend analysis, just explain that it's a tool to spot patterns over the years. Always include the shortcut calculation here. Just say you take a base here as 100 and calculate the following years as a percentage of that base. Examiners love seeing that.
All right, on to Section 3, ratio and balance sheets.
Take a deep breath here. Do not fear the numericals. Seriously, they are actually the easiest place to score perfect marks. I know raw data can look totally intimidating, like that income statement and balance sheet for Locksme Enterprises on the left, or the multi-year data for Powered Limited on the right. But listen, every single number you see here is literally just a puzzle piece waiting to be plugged into a very simple formula. So here is your foolproof step-by-step solution method. Step 1, identify exactly which ratios they're asking for. Step 2, write down the formula for each one. Guys, even if you mess up the math later on, just writing the formula guarantees you partial marks. Step 3, be extremely careful when punching numbers into your calculator. Double check it. And step 4, write a simple one-line interpretation of what that result actually means for the business. Don't skip that step. Lock this formula box into your memory because it is your best friend for this exam. Working capital turnover, that's just sales divided by working capital. Debt equity, it's exactly what it sounds like. Total debt divided by total equity. I highly recommend drawing a neat box just like this in your exam sheet and writing these down clearly before you even start calculating. If you know these, you've already won half the battle.
Next up, Section 4, working capital and costs.
Let's keep the momentum high as we enter the heavy 10-mark territory. This pro forma cost sheet from question 4 gives us the cost per unit. You can see raw materials are at 80, labor at 30, and overheads at 60. But more importantly, it lists the timeline, things like materials being in stock for 1 month or debtor credit being 2 months. All we have to do is convert these timeframes into cash requirements.
Look, financial management isn't difficult. It really just requires a system. Use a clean, easy table format in your answer sheet. First, calculate the annual requirement for raw materials, work in progress, and finished goods based on those month-long holdings we just saw. Then, figure out your debtors, subtract your creditors, and add in the required cash balance. If you do this systematically, row by row, the math literally solves itself.
Also waiting for us in this 10-mark section is the cost of capital calculation. The paper asks for X Limited, which is issuing 12% debentures at a premium, and Y Limited, issuing 14% preference shares with a 50% tax rate. Now, whatever you do, don't panic at the wall of text. We are just going to extract the specific values we need: the face value, the issue price, the interest rate, and the maturity period. That's it.
And just like with ratios, presentation is absolutely key here. Draw out a formula box for the cost of debentures and preference shares. Remember the one crucial difference: interest on debentures is tax deductible. That's why we multiply it by 1 minus the tax rate. But preference dividends, they are not tax deductible. Remember, writing out the steps clearly secures maximum partial marks, even if your final decimal point ends up being slightly off.
Finally, Section 5, Capital Budgeting Decision-Making.
All right, we have officially reached the final boss level of the paper. This question brilliantly illustrates how we apply theoretical concepts to real-world problems. Basically, a firm has to choose between machine A, which costs $1,000 immediately, and machine B, which costs $1,200,000. Now, with a 7% opportunity cost, you can't just blindly add up the numbers. Why? Because money in year 5 isn't worth the same as money in year 1. So we must discount those cash flows.
Now, once you actually discount those cash flows, the decision rules are incredibly simple. For net present value, or NPV, whichever project gives you a higher positive number is your winner. Simple. For the profitability index, or PI, if the number is greater than 1, the project is acceptable. Make sure you state the rules super clearly in your final paragraph and confidently declare the winner.
To completely nail question 5, just follow this exact sequence on your calculator. Step 1. List out the expected cash inflows year by year. Step 2. Multiply each year's inflow by the correct present value discounting factor. Step 3. Sum them all up and subtract your initial investment. That gives you your NPV. And step 4. Write down your final decision clearly so the examiner can't miss it.
So what's the crucial takeaway here? It's that if you remember your formulas and keep your presentation neat, this paper is actually remarkably easy. Are you ready to absolutely crush this exam tomorrow? I know for sure you are. Oh, and a quick pro tip before we wrap up. If you want to generate a super structured study plan exactly like this for your other subjects, just use this exact prompt in Notebook LM after uploading your previous year's question paper PDF. If this explainer helped you out, and especially if these numericals repeat in your paper tomorrow, make sure to come back, subscribe, and check out our continuing MBA Previous Year Question Revision Series. Best of luck, guys. Go ace that test.